operating profit up to 3.1 million from 1.2 million, so trebled that pretty well. EBITDA 4.8 million up from 3.2 million. Net cash 4.6 million up from 4.3 million. No debt at all. And of course, the dividend was increased by 50% to 3p. So those are the full year results last time out. Of course, the trading update basically indicates there's more of the same. We are in the run up to the interim results announcement on July the 9th. So basically 9 days away, and we're going to get a very strong update.
And joining me on the podcast and on video is Alan Green, CEO of Brand and Communications. Al.
Hello, Just. Yes, I've just about recovered from that. I'm exhausted. It's like watching Spurs watching England. I actually turned over.
They make hard work of it, don't they? I mean,
oh my
really
word.
Yeah.
I
was there. I was with my son, Monty, my wife, and she said, "I can't handle this," and she just walked out and started doing something else in the garden or something.
Yeah.
And then
I turned over and watched Shania Twain.
Did you?
Yeah.
And then I said, right, 90 seconds left, and they scored. 90 seconds left on with extra time added. But wow! So I mean that makes extra time, and they scored again. I said,
what I can't abide is this pedestrian passing the ball around at the back. We've got to get more creative.
Yeah, I don't understand that. I keep
and we've
saying
got
that
players that can do that. Look what Anthony did, but he came on against Slovenia. He split the defence open, and they brought him on with 2-3 minutes to spare. And you just think,
they came in the second half there, right? The first 5 minutes, they didn't get out of their half, and I thought Gareth Southgate didn't change players. I thought, hang on a sec. Is this the plan he's going with? Just playing around like you're 3-0 up or something, I think you're 1-0 down, guys. You got to attack. You can't score from there. I mean, it's just, whether you're a footballer or not, stats suggest that 99% of goals are scored, in the box in that area there. You're not going to score from your own box or your own. And even look at the differences. I don't know whether they've gone through this such mature side or whatever. The tactics are different, but I mean, if you looked at Slovakia, right, when they kick the ball at the goalie almost always kicks it into England's half, so and hopefully to one of their men. So therefore, you're starting in their half. That gives you better chance of attacking. Now we roll the ball out to our defenders and play in England's half. And I think, what are you doing? Get it into there. If you're going to mess around with the ball, just mess around with it in their half at least. Don't mess around in the danger zone. It's like, get up there, attack, run into the box with it, do something. They just won't do it. If I was Gareth Southgate, I said, anyone passes back now is going to be taken off. If you pass back to the goalie, you're going to be taken off. Full stop. We're attacking side. You've got to attack. You're 1-0 down. It's not looking good. And,
or if Jordan Pickford had passed the ball out to, say, Anthony Gordon, who'd gone on one of those blistering runs that he goes on, and he's so quick, that guy. He really is. When he gets the ball, there's a genuine expectation that he can split defences open.
Yeah. Do you know what is also frustrating? Yeah, but also frustrating is when they get into the area to attack. A couple of times they almost looked at it, didn't. They just cross it in. What's the worst that can happen? You'll miss. Yeah. That's it. And then the goalie will kick it back out to you. That's the worst that can happen. You just have a go. If you don't take the shot, you're not going to score. Or don't cross it in. And there's so many chances they had to cross in or have a shot, and they didn't. That's the whole point of the game. You're missing the point of the game.
Well,
anyway, but do you know what? It's a little bit football. If you look at the stats, it's a little bit of a sales funnel. The more shots you have, or the more attacks you make, the more likely you are to score.
Yeah.
Now, if you don't make those attacks or make those shots, you're not going to score. The less likely you are to score. So it's just like that, isn't it? Just up the attack rate, just up the shots, up the crosses, just up it, increase it, and you increase your chances. And if you constantly attack like that, it does put them on the other teams in the back foot. If you are playing in your half, they just come up to you. It's like, it doesn't make any sense to me. It just seems obvious. I mean, I'm not a football expert, but it seems obviously you shouldn't be playing in your own half that much. And when you get into their half in an attacking position, go for it. At least even if you haven't got a clear shot, something else make him off it. Like the second goal they had, it was a messy one, but it came for an attack and they bounced back out. They came and put it in. So the first attempt didn't work. The second attempt did. So that's the kind of thing that can happen. If you attack, you create chances by doing that. But they weren't doing that. Just have a go, for heaven's sake. It was so frustrating. Even the fans are booing them. You can't hear the fans, Anyway, let's get on to stocks of it. It's an interesting chart. I'll show the AIM all share because there we go. This is Right, here we go. This is the aimed all shit. It's come down. Look at this. It's had a bit of a rally, but look at this here. The previous rally up to here, the support here, it seems to be holding a little bit at that level. So maybe now the fall has dropped. But it's fallen off by about I think 5 or 6% from there's a high there, and yeah, pretty much 5.66% has come down. So I'm thinking now we may have consolidation period. Going to the election and going forward, like I keep saying, predicting the month in which interest rates will come down. We don't really know, but there are 4 meetings left. The Bank of England this year. The predictions are, probably 2 of those are going to reduce interest rates. Some are saying first one is August because there isn't one in July, and the second one is September maybe, or whatever. But we know they're coming down. So I think now we've had a cracking rally up here. It's consolidated, dropped a bit further than the thought, but I think it may, hopefully, it'll bump along this level there, the AIM All-Share Index, and maybe it'll be a good back end of this year, and
I
going into
think
2025.
well, I think everything is setting up now to support that theory, and
Santa rally.
Santa. Well, no, hopefully before that, hopefully autumnal rally. But I think looking at that chart, the AIM index has come off substantially, but it's in line with previous support and is consolidating, and that's a good sign. This is what you want markets to do. You want them to build, then retract a bit, and build, consolidate, build again, consolidate, and this is what we're seeing. And from a political standpoint, get the election out of the way. Whoever's in is in, and then Bank of England continues to bring interest rates down, and we're just seeing a healthier environment for investors to get involved with. And also, investors will start to, maybe once they know the election outcome, they'll start to be a bit more risk off, and we'll start to see greater volumes going in probably toward the end of the summer.
Yeah, I mean, I don't think there's going to be any radical change, from Labour, because, like I said, if Keir Starmer plays it, safely, and he wants to get another term, he's not going to want to alienate, floating Tories. And the only thing I worry about is that he does mention, he's fully upfront now on tax on income and all that stuff, but he's not. It's the stuff he's not mentioning. I think that's the worry. But I don't think, I'd be surprised if he starts attacking like ISAs and all that kind of stuff, because that is, Tory voters there, or even the floating Tory voters, will not like that, because we're taxed everywhere in this life. ISAs anyway. Everything goes into ISA pretty much taxed anyway. It's pre-taxed before you get there. So there shouldn't be. There should always be an area where you can have some. It's not even tax-free. It's stuff going into tax, but any gains you make should be tax-free, because you paid enough tax anyway. Let's be honest.
Exactly. I think ISAs. I think he will continue to support them, and I think he's got to. I think he's new Labour enough to support that and see the sense of that, because if he's got a sweeping majority, if he does absolutely dominate as the pundit seems to think he will do, he has to produce something which is sustainable for the masses and which will have an appeal to everyone. And ISA is certainly a key focus area, because those people that make money, pay the tax on the money, can then invest into something where they can enjoy tax-free gains, and that's very important. It's a cornerstone of our society, Jess.
Yeah, absolutely, and no, I mean, let's be honest, he's not stupid. He's more Blair than sort of Corbyn, isn't he? So
very much.
He's gonna go that way.
Yeah.
Okay, let's talk about individual companies. What are you looking at, Al?
Okay, Moonpig.
Oh, by the way, I don't think the Conservatives are going to be slammed in the polls. Of course, they are. That traditionally happens. I mean, not as big as this, but I do think Tories won't do as bad as people think. I think there are people out there. There's always this secret Tory voters who are scared to say in public, but they also don't want to give. They don't want to give Labour the vote either. So I think I think it'll be bad, but I don't think it'll be bad as people think it'll be. I think Tories may get a few more than people expect.
I think they will too, and I think the thing is, it's all very well. The rhetoric is out there for everyone to hear and see, but when it comes to the next 5 years, and you've got to put your estate on the line, as it were, would you really want to go to Labour? Would you want to stick with Tory? Who knows? But a lot of people are in that position now and making that choice. And I think when it comes to ticking the box on the 4th, then maybe they will stick with the Tories after all. Who knows?
Yeah, it'd be interesting to see the clear out they have. 'Cause I think Conservatives need to lose to clear out a lot of rubbish and get someone. They've got plenty of time, and they can regroup for the next general election 4 or 5 years down the line. And I think it'd be interesting to see who they go for, because obviously I don't think Sunak will be there for very long afterwards.
No,
But
I think they'll bring Penny Mordaunt in. I think if she were right now the leader of the Tory leader, I think it could be
you
a
like
very.
Penny?
I think she's great. I think she's bright. She's got a bit of Maggie in her. But she's very up to date and modern. And I think she's their best asset.
I bet you've got a poster on your wall of Penny Mordaunt, don't you?
Yeah, yeah.
In for
Penny,
penny, in for
in for a
pound.
penny.
Right.
Very good.
Okay,
Very good.
let's go in. Sorry, for company. What are you looking at?
Okay, Moonpig. We have
Yeah.
discussed this several times in the past, Just. This is, of course, the eponymous gifts. Well, it's an e-commerce destination for cards, gifts, and flowers. And of course, Moonpig, I think, is the go-to solution, the go-to app now. If you suddenly realise seven in the
Yeah,
evening.
they're going too full disorganized.
Yeah, that's right. You realise at 7 o'clock on in the evening that it's the mother-in-law's birthday the following day, so you can still get something organised, get some great photographs up there, make it look as though loads of thought has gone into it, and off it goes. And of course, that's the great thing about Moonpig. So they've got this that they have a solution that will get stuff out that by 7 o'clock in the evening with Greets, their Dutch counterparts. You can actually order up to 9 o'clock in the evening and still get stuff out the following day. So very much the gifting companion. Chief Executive Nicole Retifer, ex-Goldman Sachs, worked for Rocket Internet, Finery, and other companies. He has guided the company all the way through, and obviously they had a stellar a few years back, certainly at the start of COVID. But we're now seeing a consolidation in performance, and the company's really starting to come of age and is delivering some really, really strong numbers. So they announced yesterday the full year results to April 30th,
Friday,
2024.
yeah, Friday. Was it 27th? Is that right? Yeah.
27th. Yeah, last Friday. That's right. Yeah, that's right. Yeah, of course, the England match, I'm all in a blur, of course. So revenue up from 320 million to 341 million. Gross profit 202 million, up from 179 million previously. Adjusted EBITDA 95.5 million, up from 84.2 million previously. Diluted earnings per share, of course, 9.6, up from 7.7p previously. Some of the key factors or key drivers, Moonpig Plus subscriptions beat the target. Of course, that was launched last year. They now have over 500,000 members, so that's a subscription model that's working well for them. So on top of the loyalty that they engender, and they do have extraordinary brand loyalty. People just go back and use, and the average order value increases year on year on year. But also the group is looking at its leverage, and it's reduced its leverage now from 1.99 times to 1.3 times, and they're aiming to bring that down to 1 times. Current trading is in line with growth in new and existing customer orders, and the company has stated they are targeting double-digit percentage annual revenue growth from here on in, which is, when you turn over 341 million, that's a pretty bold claim to make. But the reason that they're doing so well, and again, the chief executive reiterated these points, the results are driven by the multi-year investments the company have made into its technology and into its innovation. So when you have a platform like Moonpig, you need to continually invest in, change, update, improve, and deliver. And it's this performance that has really secured this growth. And Retifer says in his comments, this technology, this innovation that they've continued to invest into continues to foster extraordinary customer loyalty, quote unquote. And that's really the difference. I think now, obviously years back, you'd have Interflora, you'd rely on Interflora to sort of, get the flowers to the mother-in-law or whatever. Now it's all about Moonpig. So in a sense, I think Moonpig has eclipsed that offering, and it's now come in as the go-to platform. Certainly in the UK and in Holland, it's the go-to platform to get last-minute stuff like this done, quality cards and all the rest of it. And of course, they're now expanding globally, and they'll continue to drive that growth. It's a unique brand and a unique position, and delivering very, very strong growth. I mean, debt, we're just looking at the debt numbers there. Of course, debt is down from 167 million to 125 million, consequential reduction in gearing as well. So they'll be working to get that down. But of course, when you have to innovate, when you have to invest in that technology, that sort of investment is going to be required. But as the numbers increase, that debt will go down, and Moonpig could eventually get to a point where it's instead of looking at a debt pile of 125 million, we could be looking at a cash pile of 125 million, and at that point, stand back and watch the fireworks.
Yeah. No, to be fair, look at that. I mean, all the metrics have improved, haven't they? You can see on the side here,
everything.
And even the margins improved. And like I said, reported profit before tax 46.4 million, up from 34.9, which is very good. And like I said, they can start chipping away at that with that kind of cash generation. Is fine, isn't it? So
well, they can. I'm just looking at the results from last year as well, which I've got on my sheet here, and it was a similar story then, but also they had invested then into the technology team at Tamworth, so they'd scaled that team up, and they'd also built new facilities at Almere and in the Netherlands. So again, this is what they do. They had to keep building on that and building on that technology and improving and innovating. And this is the result. You're seeing those debt levels, but you're seeing a steady increase in customer numbers, subscription growth, and financial results driven from every single metric that they've produced.
Yeah, look at that. You see, there's almost in a trading range. It broke into a new range on the 4th of July, 2023. That was at 150. It broke above that. And then it's been trading sort of 186 to 150, but it's broken up above that. And even there's a bit of profit taken today. In fact, look at that. Look at that. That's very interesting. So that's the 26th, is it? No, the 27th. Oh, that 27th was. In fact, that was Thursday then. Okay,
That was the day of the
27th is
results.
Thursday, and that was up by 15%. Then on a Friday, went up by another 4%, which is broke out through that range, the resistance at the top there, and even a little bit of profit taken today, half of 1% down. It's still above that range, which is nice to see. So it may have to consolidate a bit, but yeah, that's a breakout there, a little bit of a breakout. So it's looking good in the chart. Right, cool. What's next now?
Okay, so a complete about turn or U-turn, if you like, in terms of company size and the sector. Voyager Life, which was previously a company that had several shops up in Scotland and was selling CBD products.
Yes. I remember this now. You mentioned this before. Yeah.
Yeah. So run by Chairman Nick Tulloch, and I've known Nick for some time. He's of course also Chief Executive, Chairman rather, at ECR Minerals. And Nick is based in Perth in Scotland, and he has a reputation as a very astute financial operator. And indeed, with the results that if you look back at the results from Voyager, you'll see that reflected in terms of the structure and the careful husbanding of cash that Nick has a reputation for. But even in spite of that, the growth that he was looking to deliver, the growth trickled in rather than sort of came in a rush. It was felt that it wasn't really a sector. The CBD sector has obviously struggled to accelerate in terms of growth and in terms of the revenue generated. So he took what is a pretty brave decision and started looking at how they could, reward shareholders in a more substantial way and potentially pivot the company and invest into something else. So they announced at the beginning of last week that they were going to pivot. They are selling off the CBD assets. Those will be sold into the market. There are other buyers. They may even just sell them back and sell them to shop owners can just run the shops singly or as a unit. So those will be sold off. At the same time, the company raised, as you can see, there 864,000 through a fundraise at 3p. The shares were suspended, by the way, at 3.25p, so just below where it was suspended. And it has acquired the assets of 5 helium wells in Kansas. Now, of course, helium is well known to be the disappearing element. It's has multiple uses, both in defense and also, of course, in medical and a multitude of other applications. And it's also very rare around the world. A company came to the AIM market a few months ago called Helix Exploration, and the CEO there, Bo Sears, has got 25 years experience. He's actually written a book on helium, and the Helix, of course, have assets up in northwest USA. So M3 Helium are in Kansas.
What's the ticker of Helix? What's the ticker of that? You know?
HEX, Hex.
I thought that as well.
Yeah,
there we are. Helix Exploration. Yeah.
So helium, it's a very sort of busy sector right now because of the rarity. But what they've done, what Voyager have done, they've basically acquired a going helium operation. Now, M3 Helium has 5 wells. It has a helium production plant in Kansas at the Hugoton field, which is referred to as the North Play, and this has historically produced 30 trillion cubic feet of natural gas, and across its assets, M3 is estimated to have some 440 billion cubic feet of recoverables, which includes 5.5 billion cubic feet of helium. In addition to this, in April this year, Scout Energy, who owned the Jayhawk helium plant, connected a pipeline across the Hugoton field to their Jayhawk helium plant. So this is very much a plug and play asset for Voyager. So it means that the helium that's produced at Hugoton will be processed for a small commission, of course, at the Jayhawk helium plant. They also have assets in Fort Dodge, and Fort Dodge has a number of assets there which they will be drilling, and we're going to hear more about that as we go forward. They're going to be more expensive than the Hugoton assets because they'll need to put an on-site processor in place and an injection well for the disposal of salt water, but the payback is well mapped out. And knowing Nick as I do, and also having seen his previous financial performance, I know for a fact he's been planning this for some time. So he will have gone into this. He'll have all of the boxes ticked, and he's now rolling this plan out as we speak, and we're going to see when the company comes back to market, we're going to see that plan in action. So it's a really exciting move, and I think one that's going to deliver long-standing Voyager shareholders some substantial growth in the coming weeks and months, and certainly look forward to hearing from Nick about the next moves.
Yeah, what they should do is a presentation on helium.
Yeah.
I'm Nick.
Yeah, well, of course, there have been some jokes flying around about moving from cannabis to helium, 2 different highs, but but no, I mean, realistically, I think the CBD market is a slow burn, excuse the pun. And
it's a slow burn, and it's a bit saturated as well. There's so many companies doing that. See, if you look online, the CBD is everywhere. I think
yeah,
that's the thing when you open a new market like that.
And I think if you've got a group of shops, you're going to generate, and indeed the outlets that are owned by Voyager do generate steady income, but they don't generate company changing income. It's a business that will continue continue to tick over. And I'm sure they've probably already got buyers lined up for those assets, so they'll sell those off. That money will then go back into the company. So in addition to the A64 that was raised, those assets will come to the bottom line. But Nick's always run the business very carefully. They've always had several hundred thousand resources in the bank, but with the additional here now, I think they look very well placed to deliver some growth and some strong results. So looking forward to hearing the next bunch of news.
Yeah, look at that. They say they terminated decision to acquire Northern Leaf PLC, and they said alongside the termination, Voyager's share price fell approximately 60%, perhaps illustrating the challenges facing smaller companies in current markets. A series of trades worth some £20,000 in aggregate reduced the company's market capitalisation by £1 million.
Yeah.
As a consequence, the Voyager's market cap was only 612,000. So that's the trouble with the liquidity, isn't it? You get a couple of small trades going through cells. It just takes the stock down massively. So
well, it does, and it's disproportionate too. And I know Voyager there was a deal in Poland that fell through, I think, last year. They got to the point where it was looking as though the deal would get across the line, and then there were some anomalies and irregularities discovered, so they stepped back from that. And I believe the same happened with Northern Leaf as well. So it's a difficult business to operate in, and I think that was the straw that broke the camel's back. But I know this is, given Nick's experience with ECR, what he's seen there, the way in which both he and the chief exec Mike Whitlow have grown the business since taking over in October last year, I think he sees real opportunity in helium. And certainly, if you look at the performance of helium exploration date, or HEX, under Bo Sears, I think there's every prospect that the same could happen now for Voyager, or as it will probably be known as M3 Helium.
Yeah. So helium Helix exploration came to the market when the 9th of April 2024.
Yep.
They ran about 12 pence. It's now 22.4 pence. So it's done well. So
It has done well. Yep.
Yeah. Cool. Okay. And to the last one now.
Okay, so we move from helium to security. So I want to talk about a company called Synectics. Now,
I know Synectics very well.
Well, I was going to say, well, coincidentally, a certain person sitting opposite me launched a.
Oh yeah. Oh, don't mention that. Yeah, it may be one of those. Yeah, I launched it, but sharepickers.com/tips. So on a Sunday at 7, I send out to people on the list there. Subscribe. I send out a free, tip. I go through the fundamentals, technicals, what the broker says, and all that stuff. And I own, and this could be one of them. Who knows? Because I tend to focus on microcap companies that are generating revenue, profitable, a good value, the growth value, momentum. They got all that, and health and all that stuff, and obviously, potential. But I like Synectics a lot, and hopefully, maybe I may be interviewing the CEO soon. So Anyway, go on now.
Excellent. Well, Synectics, they are a company in security and surveillance, and certainly since December 23, they delivered some pretty spectacular top right-hand corner stuff. The shares were trading at just below £1 in the run up to Christmas, and here they are now trading £1.90, having already hit £2 intraday. But it's a company that offers security and surveillance systems protecting people, property, communities, and assets. They operate around the globe, and also they operate in specific markets, in particularly gaming. Of course, that's casinos and gaming establishments.
Yeah.
Oil and gas, of course, public spaces, transport, critical infrastructure, all the while using their Synergy platform, which is their in-house platform, Synergy, to operate and monitor the premises or area with which they're charged to monitor. Synergy is a highly configurable platform that can be configured for client solutions, and of course to meet particular challenges from specific clients. Now, it's been a very successful year for the company, as we've seen on the share from the share price already. Chairman Bob Holt, of course, is overseeing the business. Bob has founded Revolution Beauty. He was on the board of SureSave PLC and also was instrumental in the IPO of Mears Group PLC. Of course, that's another sort of public services company. Paul Webb is the chief executive. Paul Webb has got 35 years in electronic surveillance and security systems. And their experience, or their collective experience, I think, as a board really tells here. April this year, they won an £800,000 contract with the UK utility. In a trading update on June 4th, they provided a trading update for the 6 months to May 31st, 2024, trading comfortably in line with expectations, with a more evenly weighted financial performance than being the second half weighted, as was the case previously. Now, going back to the full year results they announced for the full year ending last year, revenue up 26% to 49.1 million, profit up, operating profit up to 3.1 million from 1.2 million, so trebled that pretty well. EBITDA 4.8 million up from 3.2 million. Net cash 4.6 million up from 4.3 million. No debt at all. And of course, the dividend was increased by 50% to 3p. So those are the full year results last time out. Of course, the trading update basically indicates there's more of the same. We are in the run up to the interim results announcement on July the 9th, so basically 9 days away, and we're going to get a very strong update. But of course, since then, they've announced a further contract win, which has also helped to drive the share price. A 10 million contract with a gaming resort. There's a big casino establishment in Southeast Asia. Now, this company's been using Synergy since 2014, so it's a major contract upgrade into new facilities and new resources to that existing contract. So that to me is a massive tick in the box when you've got a company that the company's been working with coming back and doubling or trebling their spend because they like or they value the service they've received already. So that's a real tick in the Synectics box there. So we've got 9 days to go, guys, and then we're going to see what will hopefully be a very strong set of results that will underline what the company have achieved already and provide the next floor in the share price to drive growth up to and beyond £2.
Yeah, what I like about this is that first of all, Paul Webb, CEO, has about 3.5% of the shares, which I quite like. It's literally only a 30 million enterprise value, but 30 million, right? They just did a contract for $10 million. Like I said, from a company they're already working with. So that shows how good they are. They spend that much money. But even if you go back and look at this, if you look at the contracts, and what I quite like is it's like you get it's hardware and software. So first of all, if a new company comes to them and wants to use their hardware, which is rugged sort of cameras or specialist cameras, they use AI as well. So they get an upfront payment for that. But then they get the plug-in for the Synergy software, which is recurring revenue. And so there's two bits of it. Like I said, they are profitable, they are growing very well, but also valued by their net assets, which is like, it's quite rare you're a company that's profitable, growing, and valued. So the value is still compelling. And yet, even though the share price has risen. So I see a lot further upside in this. I think brokers have a 12-month target, 60% higher than where we are now, but they pay a dividend up that. But if you go down, £10 million contract, right? And if you look at these contracts, contract with a utility provider, which is 800,000. And it's like, it reminds me of Junio. When Junio said, I'm just releasing contract. In fact, they've got an overlap of board members, actually. But where's the other one? There's another one. There was a contract award. Every couple of months, they're getting new contracts. It's 4 million, that was. National Grid. So these, for a company that's 30 million enterprise value, these are big contracts, And like I said, once they plug in as well, look at that. It will now be deploying its services across 20 sites across National Grid substantial estate. So it's to me, I think these kind of things, once they plug them in and they use their software, it's just very sticky revenue as well. So I quite like it. And
well, I think companies like that's the thing. It's sticky revenue, but also there's revenue potential for growth because as we saw with that client in Southeast Asia, that was an upsell on an existing contract, and that company has been a client of Synectics since 2014. So that's 10 years that they've been a client for 10 years, and they've come back and they've upped their spend massively for a new premises. So that tells you all you need to know in terms of what once they win a client, that client stays with them and generally will increase their spend. So that's a really yeah.
So companies like that, I send out information on a Sunday at 7 o'clock. If you're on the list by then, go to sharepickers.com/tips. They're free. They're not investment advice. Please do your own research. The companies I may hold stock in or like, it's not investment advice. It's just information. It's helping you filter through lots of companies because it's something I've done research on, and hopefully you'll find some value in it. But it's free, so it doesn't cost you anything. But and I expect to see your email joined up as well now. For that as well. So
already have just.
Okay, cool. Yeah, that's right. Yeah, you have. Sharepickers.com/tips. Al, thanks for that, and we'll speak next week.
Just speak next week.